Preparing for a finance manager at BT interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to become a finance manager at BT? I want to join BT because finance has a direct connection to a complex, essential service, keeping customers and businesses connected. The role combines disciplined financial management with transformation, network investment, cost efficiency, and commercial decision-making. I would bring strong forecasting, control, and stakeholder management skills, while developing a deeper understanding of telecom economics. What particularly appeals to me is helping operational leaders turn financial insight into better customer outcomes, sustainable cash generation, and credible delivery against BT's strategic commitments. While answering, connect your motivation to BT's telecommunications scale, transformation agenda, customer impact, and need for commercially minded finance leadership. Link your experience to planning, performance management, controls, and partnering with operational stakeholders. Question 2. Tell me about your experience preparing budgets and forecasts. My approach begins with the operational drivers behind revenue, headcount, procurement, capital expenditure, and working capital. I build a bottom-up forecast, compare it with strategic targets and historical trends, then challenge assumptions with budget owners. I normally prepare base, upside, and downside scenarios, highlighting sensitivities and required actions. After approval, I establish monthly tracking and ownership. This keeps forecasting dynamic and decision-oriented, rather than treating the annual budget as a static document. Make sure to cover your planning process, assumptions, business driver ownership, challenge of submissions, scenario analysis, review cadence, and how you converted forecasts into actionable decisions rather than merely producing financial reports. Question 3. How would you explain a significant monthly variance to a non-finance director? I would start with the headline variance, its financial materiality, and whether it is favorable or unfavorable. I would then separate the movement into volume, price, mix, timing, foreign exchange, and one-off items. For example, an overspend could reflect accelerated network activity rather than poor control. I would explain the operational cause, distinguish temporary from structural effects, and finish with owners, actions, and expected recovery timing. The aim is understanding and accountability, not simply explaining a number. In your answer, discuss separating price, volume, mix, timing, and one-off effects, quantifying root causes, explaining business implications, agreeing corrective actions, and communicating clearly without excessive accounting terminology. Question 4. Which KPIs would you monitor in a telecom finance role at BT? I would monitor revenue by customer segment, average revenue per user, customer additions, churn, retention, and product mix. On profitability, I would track EBITDA, margin, operating cost per customer, cash conversion, and capital intensity. Network availability, fault rates, installation performance, and customer satisfaction are also important because operational quality influences retention and future revenue. I would avoid viewing any KPI in isolation. For example, aggressive acquisition may increase customers but destroy value if churn and acquisition costs remain high. Be sure to mention revenue growth, ARPU, customer numbers, churn, EBITDA, cash flow, capital intensity, cost to serve, network performance, and customer outcomes, explaining how financial and operational metrics should be interpreted together. Question 5. Describe a time you improved financial performance through business partnering. In a previous role, service costs were rising despite stable volumes. I partnered with operations to analyze activity by supplier, location, and failure type, identifying repeated emergency work as the main driver. We redesigned approval thresholds, introduced preventative maintenance, and renegotiated selected supplier rates. Monthly reviews tracked both savings and service levels. The initiative reduced annualized costs by approximately 8% without worsening response times. It also improved trust because operations saw finance as a problem-solving partner rather than a cost-cutting function. Focus on a specific situation, the operational problem, analysis performed, stakeholders influenced, action implemented, measurable result, and how you balanced cost reduction with service quality and long-term commercial value. Question 6. How would you assess a proposed BT network investment? I would first confirm the investment's strategic purpose, such as capacity, coverage, resilience, customer experience, or cost reduction. Then I would model incremental revenue, avoided costs, operating expenses, CapEx timing, tax, working capital, and terminal effects. I would assess NPV, IRR, payback, and downside scenarios, especially around demand, delivery delays, inflation, and benefits realization. Finally, I would define measurable post-investment KPIs, because approving a business case is only the beginning of capital discipline. In your answer, cover strategic fit, customer and capacity benefits, incremental revenue, operating savings, CapEx profile, NPV, IRR, payback, risks, scenarios, regulatory considerations, and post-investment benefits tracking. Question 7. What is your approach to managing cash flow and working capital? I would build cash visibility from operating drivers rather than relying solely on accounting balances. That means monitoring billing, collections, supplier payments, payroll, tax, capital expenditure, and major contract milestones. I would investigate overdue receivables, challenge aged accruals, and coordinate with procurement on payment terms without damaging supplier relationships. A rolling cash forecast would include scenarios and confidence levels. My priority is protecting liquidity while ensuring reported liabilities, commitments, and expected cash movements remain complete and accurate. Mention cash forecasting, billing and collections, supplier terms, accrual accuracy, inventory, capital payment timing, liquidity visibility, escalation of risks, and collaboration with commercial and procurement teams. Question 8. How do you ensure accurate month-end reporting? I use a documented close timetable with clear ownership, dependencies, and review deadlines. Key controls include bank and balance sheet reconciliations, revenue cutoff testing, accrual and prepayment reviews, fixed asset updates, and analytical variance checks. I expect preparers to retain evidence and reviewers to challenge unusual movements, not simply approve them. I also prefer resolving issues before close through regular communication with budget owners. A reliable close provides both accurate results and a stronger foundation for forecasting and decision-making. Make sure to cover close calendars, reconciliations, accruals, prepayments, revenue cutoff, variance review, journal controls, materiality, audit trails, and early resolution of issues with operational owners. Question 9. How would you manage revenue recognition issues in a telecom business? I would begin by understanding the contract, customer promise, billing structure, and delivery pattern. For bundled connectivity, hardware, installation, and service arrangements, I would identify performance obligations, determine standalone selling prices, allocate consideration, and recognize revenue as each obligation is satisfied. I would pay close attention to discounts, contract modifications, upgrades, cancellations, and handset or equipment arrangements. Where judgments are material, I would involve technical accounting early and document the rationale, controls, and supporting data thoroughly. Discuss understanding contract terms, identifying performance obligations, allocating consideration, timing recognition, customer incentives, bundled products, system data, controls, and collaboration with technical accounting and commercial teams. Question 10. What financial control risks are particularly relevant to BT? Relevant risks include incomplete or inaccurate billing, complex system interfaces, unauthorized journal entries, supplier fraud, inappropriate capitalization, contract modifications, and weak access controls. Large network programs also create risks around project costs, commitments, asset commissioning, and benefits tracking. I would assess the control design, identify key preventive and detective activities, test evidence, and remediate root causes. Controls should be proportionate and automated where possible, but ownership must remain clear. Strong governance protects both financial reporting and customer trust. In your answer, address revenue completeness, system interfaces, supplier payments, access controls, capital projects, contract changes, data quality, journal entries, regulatory reporting, and the balance between strong controls and efficient processes. Question 11. Tell me about a time you challenged a senior stakeholder. A senior stakeholder once requested approval for a project using optimistic volume assumptions and limited contingency. Rather than rejecting it immediately, I rebuilt the model with historical benchmarks, tested downside scenarios, and identified which assumptions drove the return. I presented the concern privately, acknowledged the strategic rationale, and proposed a phased approval with milestone-based funding. The project proceeded on a controlled basis, and the relationship improved because the challenge was evidence-led, constructive, and focused on achieving the objective responsibly. Focus on respectful challenge based on evidence, listening to the stakeholders' objectives, explaining risk or value clearly, offering alternatives, reaching a decision, and preserving the relationship after disagreement. Question 12. How do you prioritize competing deadlines during a busy reporting cycle? I rank work by financial materiality, external or regulatory deadlines, business impact, control risk, and dependency on other teams. I create a visible plan, clarify ownership, and delegate tasks according to capability rather than trying to retain every activity personally. If priorities conflict, I escalate early with options and consequences. I protect critical reconciliations and review controls even under pressure. Clear communication prevents surprises, while disciplined planning allows urgent requests to be handled without compromising reporting quality. Be sure to mention materiality, regulatory and close deadlines, dependencies, delegation, risk-based prioritization, proactive communication, escalation, and maintaining control quality instead of allowing urgency to create avoidable errors. Question 13. How would you evaluate a cost-saving proposal that could affect customer service? I would quantify the gross saving, implementation cost, timing, and recurring benefit, then model possible effects on churn, complaints, service levels, revenue, and brand reputation. A lower supplier or staffing cost may be unattractive if it creates avoidable customer losses. I would compare alternatives, test scenarios, and recommend safeguards such as pilots, service thresholds, or phased implementation. After approval, I would track realized savings alongside customer metrics, ensuring the initiative creates sustainable value rather than merely transferring costs elsewhere. Discuss total value rather than headline savings, customer and revenue impacts, service level metrics, implementation costs, risks, alternatives, scenario analysis, and monitoring after implementation. Question 14. What is your understanding of International Financial Reporting Standards 16 and its relevance to BT? International Financial Reporting Standards 16 generally brings lessee leases onto the balance sheet through a right-of-use asset and lease liability, replacing much of the former straight-line rental expense with depreciation and interest. For BT, relevant arrangements may include property, equipment, sites, vehicles, or network-related assets. I would focus on complete lease populations, commencement dates, term and renewal judgments, discount rates, modifications, and data quality. The accounting changes EBITDA presentation and balance sheet metrics, although total cash paid is not fundamentally eliminated. Cover the lessee right-of-use asset and lease liability model, EBITDA and cash flow effects, discount rates, modifications, lease term judgments, telecommunications infrastructure, and the need for complete contract data. Question 15. How would you build a business case for a digital finance transformation project? I would establish the baseline, process time, error rates, manual effort, close duration, control issues, and existing technology costs. The business case would quantify recurring savings, faster decisions, better data, and reduced risk, while including implementation, licensing, integration, training, and change costs. I would assess payback and scenario ranges rather than relying on optimistic benefits. Approval should include milestones, accountable benefit owners, and post-launch measures, because technology creates value only when processes and user behavior change with it. Mention current process diagnosis, target benefits, automation potential, implementation costs, controls, data migration, adoption, payback, risks, scenarios, and benefits realization with accountable owners. Question 16. How do you manage and develop a finance team? I set clear outcomes, ownership, deadlines, and quality standards, then tailor support to each person's experience. I use regular one-to-ones to review delivery, remove obstacles, provide feedback, and discuss development goals. I delegate meaningful work with appropriate review rather than retaining control of every detail. During busy periods, I protect team focus and recognize strong contributions. My goal is a team that can explain the numbers, challenge assumptions, and operate independently while maintaining reliable controls and collaborative behavior. In your answer, cover role clarity, coaching, performance expectations, delegation, technical development, succession, psychological safety, feedback, recognition, and maintaining accountability during demanding reporting periods. Question 17. Describe a forecasting error you made and what you learned. Earlier in my career, I underestimated the timing impact of a supplier transition, causing a temporary cost mismatch between forecast and actuals. I identified it through a detailed variance review, informed stakeholders promptly, corrected the forecast, and separated timing from the underlying run rate effect. I then introduced milestone-based phasing and required operational confirmation for transition assumptions. The lesson was that a mathematically sound model can still be weak if its timing assumptions are not validated with the people delivering the change. Be honest but controlled. Explain the error, its impact, how you identified it, corrective action, stakeholder communication, and the process improvement that prevented recurrence without blaming others. Question 18. How would you respond if an operational leader asked you to delay recognizing a cost? I would clarify the underlying facts and determine when the obligation was incurred, what service was received, and whether reliable estimation is possible. If the cost belongs in the current period, I would explain that delaying recognition would compromise reporting integrity and potentially violate policy. I would propose an evidence-based estimate, document the judgment, and escalate through the appropriate controller or technical accounting channel if disagreement remained. I would stay constructive, but financial reporting standards and control requirements are non-negotiable. Make sure to discuss accounting principles, evidence, cutoff, materiality, independence, respectful challenge, escalation routes, documentation, and distinguishing legitimate timing uncertainty from inappropriate earnings management. Question 19. How do you use data and analytics to improve finance decision-making? I start with the decision that needs improving, then identify the relevant operational and financial drivers. For example, customer profitability may require combining revenue, product mix, service usage, churn, acquisition cost, and cost to serve data. I prefer automated dashboards for recurring metrics, with exception analysis directing human attention to material changes. Data quality, definitions, and ownership must be controlled carefully. The final test is whether insight changes an action, such as pricing, investment, resourcing, or customer retention. Discuss reliable data sources, driver-based analysis, dashboard design, segmentation, automated reporting, exception analysis, data governance, and converting insights into decisions with measurable financial outcomes. Question 20. What would your priorities be in your first 90 days at BT? In the first month, I would learn BT's strategy, organization, reporting calendar, key systems, control framework, and major performance drivers. I would meet finance and operational stakeholders to understand expectations, pain points, and decision rhythms. During the second month, I would review forecast accuracy, variances, risks, and critical processes, identifying a few practical quick wins. By day 90, I would agree priorities, strengthen communication routines, and present evidence-based improvements aligned with performance, cash, controls, and customer outcomes. Cover understanding strategy and business drivers, meeting stakeholders, learning reporting and control processes, reviewing forecast quality, identifying quick wins, building credibility, and avoiding premature conclusions before understanding context. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.